Jason Herring here with Insurance and Estates, your IUL specialist. So this morning, let's talk a little bit about policy review. Now, as most of you are out there starting to do more research around cash value accumulation inside of life insurance products, you've probably been out watching our videos online at InsuranceandEstates.com, some of our YouTube channel videos, and you're probably starting to realize that the policy that you currently own was not built correctly for cash value accumulation. Most of the policies built 10, 15, 20, 25 years ago have more of a death benefit focus than they do a cash value focus. So wanted to share a case study with you. This was a male age 48 that came to us here within the past year. He received a preferred non-tobacco underwriting offer when he got through with underwriting. But he came to us with a old whole life policy that it was just right at 20 years old. Okay. So this old whole life policy had a death benefit of a little over $3 million based on a $25,000 annual premium. So the policy had also, over the past 20 years, had built up about $260,000 of cash value. Well, in the life insurance world, we have a concept called a 1035 exchange. This is straight from the IRS tax code. And what it does is it allows a client to move their existing cash value from one policy to a new policy. And as long as that cash does not touch the client's hands, it is not a taxable event, even if the policy has a gain in it. So this gentleman came to us and said, hey, can you just review my existing policy? We ordered an in-force illustration. We took a look at him and we realized that if his primary goal was to build cash value, to maximize tax-free retirement income, we needed to get him out of his old policy with that large death benefit and move it to a better optimized policy for the client. So we moved that money over, the $260,000, and we had the software solve for what is the least amount of insurance we have to purchase based off of a $25,000 planned annual premium and the $260,000 coming over. So we moved this client from over a $3 million death benefit down to $1.2 million, which right away is going to allow this policy to be more optimized for cash value growth because we have so much less cost inside the policy paying for $3 million of death benefit. So this is an index universal life that we're using here, and we're using a average rate of return of 6%. This product here with Mutual of Omaha actually has a current cap of 10%, so the client could have higher returns, could have lower returns as well, but we're just using an average of 6% for all years inside the policy. So you can see the first year, the $25,000 plus the $260 coming over. Then we're going to pay premiums for 10 years with a total cost basis inside of the policy of $510,000. So then the client plans to just leave the policy alone, let it continue to grow, and then at age 65, the client wants to start taking retirement income. So once again, based off of a 6% average rate of return, the software solved for $88,257 of annual tax-free retirement income for 20 years. So $88,257 for 20 years. You do the math on that. The client put in $510,000, and this client is going to be able to take out, based off of a 6% rate of return, $1.7 million of tax-free retirement income. And if this client were to pass away at age 85, we still have a small residual $136,000 death benefit that's going to his family. So this gentleman was ecstatic to see what we could do to get him out of a policy that was more focused on death benefit, didn't need that amount of death benefit, was able to bring him over to a policy that's more optimized to lower his cost so that his cash value can grow much quicker and be more efficient for tax-free retirement income. So guys, I promise you probably have these policies in force right now and you need to review them. I'd be happy to learn more about you and your goals, and we'll get some in-force illustrations ordered and see what we can do to better optimize your policy for cash value growth. You can also reach out directly to me. That's what this client did here. Just send me an email at Jason at InsuranceandEstates.com, Jason at InsuranceandEstates.com. and I'll be glad to walk through and see what we can do. Thanks again, guys. Have a great week.
Okay, well, thanks, Jason. Fantastic example. Could work for you guys watching. A couple things you can do now. You can go locate your old policy. You can see how much death benefit and cash value you have there. You also might want to consider emailing that policy to Jason at InsuranceandEstates.com. His email will be below wherever you're watching this video. Finally, his calendar link is going to be there, so Jason can be reached via his calendar. You can schedule a one-to-one if you want to have your policy looked at. Encourage that, welcome that. All right, thanks for watching, guys, and we'll see you in the next one.